All right, we do have a bit of breaking news for you. The Federal Reserve announcing that interest rates will remain unchanged in its latest decision. It comes roughly a week after data actually showed inflation ticked up again in February. For more, let's bring in the dynamic duo, our Elizabeth Schulze and Alexis Christoforous, that do everything business for us. All right, Alexis, we'll start with you. You break down the decision, and then we're going to get Elizabeth to weigh in.
No big surprises here today, Kira. The Fed doing the expected and holding interest rates steady for the fifth straight time now. This is after aggressively raising interest rates over the past 2 years to battle the highest inflation we've seen in decades. Of course, we were expecting this to be the decision today, so the focus was really on what is the Fed going to do moving forward. Back in December, Fed policymakers were looking at 3 interest rate cuts at some point this year, and along with this decision today, it looks like that has not changed. The Fed's still expecting to cut interest rates 3 times this year. Just when that will happen is yet to be known. Some economists now believe it may happen at their June meeting. Inflation has come in hotter than expected so far this year, so the Fed wants to see more proof that inflation is moving in the right direction, that it's getting closer to its 2% target. Remember, we have inflation now at 3.2%, so there's still a ways to go. So the Fed needs to feel confident. They need to see more data come in before they start cutting those interest rates, Kira.
So, Elizabeth, as you know, we're in election year here, a big one. The race to the White House come November. Is the election playing a part in all this, you think?
Well, and this is where this question of when that first rate cut will happen that Alexis was talking about gets really tricky, right? Because the Federal Reserve is independent from the White House. The Federal Reserve says it operates as an independent entity. So it says its job is to look at the economy, look at the data like inflation, and say, what do we need to be doing that's the best policy for that? But it gets harder because if that first rate cut is in June and there are 2 more cuts after that, you're looking closer and closer into November. And the Fed, as Alexis pointed out, is still sticking with those 3 rate cuts this year. You're looking at your screen right there at President Biden's low approval rating. And basically, this is not a secret that the president has struggled with these higher prices. The Fed is saying it's trying to do what it can to get those prices under control. The White House insists the Fed is independent. But as these rate cuts get closer to the election, it does get a little bit trickier to say that this is separate, even as the 2 insist that they are, Kira.
So, Alexis, what does this mean for interest rates going forward, you think?
Well, if you were hoping that rates on mortgages, car loans, credit cards were going to come down soon, you're going to have to wait a little longer. I guess the good news is rates didn't go up anymore, but they didn't go down either. We did get some troubling news today. There's a new survey out that shows 15 million Americans now putting everyday essentials like their groceries on those buy now, pay later apps like Affirm and Klarna. So people are still truly struggling with higher inflation in parts of our economy where inflation has sort of stuck around, even though we've seen it come down in other areas. And sadly, that has happened for the essentials like rent and like food. So while we do hope and hold out hope that these rates are going to come down in the coming months, for now at least, it is the status quo.